Hello and welcome to Your Trades on ET Now. This is Mansi Dave and with me is my colleague Snehi Shah, and together we are going to give you a quick know-how of how markets today reacted and help you navigate through what should be a strategy for tomorrow. But first things first, a look at the market and the performing session for the day. Despite a lot of questions, geopolitical concerns and global contingent scenarios, Snehi, Indian markets did showcase quite a mature behavior on the Monday session to start with.
Absolutely mature is the word that we can use for the market right now. Haida, let's take a look at what the market session has been like in today's trading session. You have cuts coming in on Nifty, almost 0.5% cut coming in. Remember, at one point of the trading day, we were above the 25,000 mark. We held on to it for quite some time, but towards the end of the trading session, we slipped significantly lower from there. But nonetheless, like Mansi mentioned, this is a mature reaction. Things could have gone much alright if you take a look at the geopolitical backdrop. Because other than the Nifty 50, if you take a look at the broader end of the market, very stellar moves coming in from the mid cap, small cap index. Both of them slightly off the day's high in the last couple of minutes of today's trading session, but have managed to close in the green. Nifty mid cap up 0.3%, Nifty small cap outperforming the rest of the market, up 0.6%. So that's the broader market that we're talking about. Other than that, if you take a look at some newsmakers in today's trading session, other than Z that we have already spoken about, and ABFRL demerger into ABLBL as well. Other than that, from the Nifty 50 gainers today, you had Trent and BEL, two stocks that were in focus on the back of the Sensex 30 rejig and their inclusion today. Hindalco, Bajaj Finance, Coal India, Tata Consumer, Adani Enterprises, these stocks have done well from the Nifty basket. On the flip side, big losing moves coming in from the likes of Infosys, HCL Tech, both lower by 2%. You have TCS, Wipro, both seeing cuts of more than 1% on the back of Accenture numbers coming in. So that ripple effect has been seen in Indian IT, and Nifty IT, the top sectoral loser in today's trading session. Following that, you had a couple of FMCG and auto names too that have not done well. The likes of M&M, you have HUL, ITC, Hero Motor from Auto, and FMCG, both that have not done well in today's trading session. So sectorally, if you take a look at how today's session has panned out, Nifty Media has outperformed the breadth of the market, up almost 4.5%, led by robust moves coming in Z Entertainment, up 12.5%. That was followed by Metal, Pharma and Energy. Pharma and Energy barely holding on to that tinge of green. On the flip side, like I mentioned, IT, Auto, FMCG, Bank, Realty and PSU banks were the top laggards in today's trading session. But with this entire setup, let's also get a perspective of what we can expect in tomorrow's trade. We have Lakshmikant Shukla, technical analyst and institutional research at Yes Securities, joining us on the board. Lakshmikant, hi there, and thanks so much for joining us on the show. Give us a sense of the market moves that we've seen today. What are you making of this reaction to all the geopolitical action over the course of the weekend? Because while Nifty has ended in the red, the broader markets have been resilient, and how?
Good afternoon to both of you. For the last few sessions, Nifty has consistently holding its key support levels of 20 SMA, which is coming around the zone of 24,860 to 24,850, with additional crucial support, which is placed around the zone of 24,700. And this range is expected to act as a strong support zone in the coming sessions, cautioning any potential downside. But at the higher end also, Nifty is again facing resistance from the key resistance level of 25,100 to 25,300 levels, where 78.6 Fibonacci retracement levels is also seen. So that could be the critical resistance. Any decisive move of this level of 25,300 could bring fresh buying momentum in the Nifty. Until we see any decisive move of the levels of 25,300, we could see a range bound move, as I already talked about the strong support which we have found near the levels of 24,850 followed by 24,700 zone. Meanwhile, Bank Nifty also need to sustain up the levels of 56,500 for any further uptrend toward the levels of 57,050. However, on the downside, till it hold up the levels of 55,400 to 55,150, we will remain positive in Bank Nifty, and we could expect that this upside move will extend further higher toward the levels of 57,000 in the upcoming sessions.
57,000 is a level which is anticipated for Bank Nifty. Of course, the undertone of the market is positive as per our experts. For sure, Nifty did test 25,000 mark to close somewhere around 24,900 and above, but 24,850 is the strong support as we see. So that's a view on the index and the strategy on the index, which you should watch out for the trading session tomorrow. But the major contributors Lakshmikant, good afternoon. For today, where Kotak Mahindra Bank, Hindalco, Coal India, Divi's Laboratories, Tata Consumer, and on the flip side, we did see Infosys, L&T, HDFC Bank, ICICI Bank, M&M plunge in trade. What are your stock-specific recommendations for the coming sessions?
So looking at the bullish structure of the market, we have also recommended. I'm also recommending two buy calls. So first call is coming from the Nifty Financial Services Index, as we have seen a strong rebound on the Friday session with the formation of bullish belt hold candle in Nifty Financial. So we think that LTF, so which is also known as LT Financial Services. So we could see upside momentum in this stock, as this stock has given symmetrical triangle breakout on the daily chart with the formation of bullish candle. And even if we look at the RSI, so that has given bullish crossover on the daily chart. So overall expectation is on the upside in LTF. So one can go long at current price also with the stop loss of 186 on the downside, and we expect higher momentum toward our target, which is coming around the zone of 204. Second stock which we like, that come from the metal space, that is Nifty, that is Hindalco. So Hindalco has formed a strong base near its rising trend line, and it has also formed a multiple bullish candle around this support level. So from here on, we could see a positive momentum in this stock, and even this stock has formed a symmetrical triangle pattern on the daily chart, and breakout is expected at the levels of 670. Once it crosses the levels of 670, we could see upside momentum toward the levels of 710. So even one can go long at current prices also, as risk reward ratio is favorable. And even today's session, it has also reclaimed the 200 DMA with bullish crossover in MACD. So overall setup is on the bullish side. So one can buy Hindalco at current levels, which is trading around the zone of 655 to 660, and can expect upside target of 710 with the stop loss of 635 on the downside.
The finance and Hindalco looking good to Lakshmikant at the moment. Lakshmikant, thanks for joining us. On that note, we'll let you go. Well, time to slip into a word from the wise segment, and today that's Aman Chauhan, Abacus Asset Manager he's from Abacus Asset Manager LLP, and he shows positive outlook on specialty and base chemicals. Let's go across and listen in to what else he had to say about the cash position that he holds in his portfolio.
We have a positive view on chemicals, not just because of Iran, it's also because chemical prices have stabilized globally, and the oversupply that we were seeing from China is now behind us. And that's where we feel India can really pick up. And post IT and pharma, chemicals have been doing well for the last few years, and this can be a real long-term good opportunity for India to gain market share out of China. So we have a pretty positive view on chemicals, especially from these levels. Last 2 years have been tough for them, but now both specialty as well as base chemicals, both are looking attractive. So we would be, say, high single digit to low double digit kind of cash levels. This is not something that we have strategically created, just that the inflow that comes in, we are taking slightly longer time to deploy that. So if somebody comes in today, 50-60% of that will be deployed in the next 1 week, and then we'll wait out for the balance, and depending on how the global situation pans out. So that is building up the cash overall in the scheme, but it's not that we have created specific cash in the portfolio.
Okay, so that's about the energy pack. Oil prices surged as tensions in the Gulf escalated, with Brent crude rising to its highest level since January amid fears of supply disruptions. Analysts say if Iran closes the Strait of Hormuz, prices could exceed $100 a barrel. The strait is vital, carrying about a fifth of global crude. Iran's parliament has called for its closure, but the supreme leader's approval is needed. Ashesha is with us. Ashesha, first tell us what's happening in the commodity market.
Well, yes, lots in fact happening in the commodity market, and as you rightly mentioned, tensions in West Asia continue to escalate, because of which Brent crude surged near that $79 per barrel mark in today's trading session. Remember, Strait of Hormuz is an important choke point for global oil supply, and any disruption over there is likely to take prices even higher from the current levels. Goldman Sachs in fact came out with a report where they say that if supply were to be disrupted if geopolitical tensions continue to escalate and Iran indeed blocks the Strait of Hormuz, then prices could touch nearly $110 per barrel mark going forward. So yes, on the back of rising geopolitical tensions, we have seen a solid uptick. In fact, from the recent lows of $60 per barrel in the month of May, Brent crude prices have surged over 30% since then. So that's the kind of uptick we have seen, and geopolitical tensions is the primary reason why oil prices continue to surge in the global market.
Okay, Shesha, thanks for taking us through that. But while you're with us, also talk to us about what actually will happen if the Strait of Hormuz is held or is closed down by Iran, like they have been threatening. So, if they make good on that threat, what happens and what's the significance of this strait geographically?
Well, yes, so Middle East produces 1/3 of global oil, and Strait of Hormuz helps in transportation of nearly 1/5 of world global oil consumption. So that's the importance of Strait of Hormuz. As you mentioned, Iran has in the past threatened to block this particular waterway, although they've never really done that. But this time around, Iran's parliament has already given a nod to block Strait of Hormuz, although it requires further approvals. As of now, there are fears that perhaps supply could be disrupted, but nothing actually has taken place. But on account of fears of supply disruption, we have seen the kind of upsurge in the oil market. So Strait of Hormuz clearly is an important waterway for transportation of oil globally, and several countries globally from Iraq, Saudi Arabia and several other countries rely on this particular waterway. For India, it is not going to be a major negative because Hardeep Singh Puri has already clarified that we have enough buffer and we have diversified our sources of oil beyond Strait of Hormuz. So for India, we are not expected to see any kind of negative impact, but for the globe, if at all this route or this waterway were to be blocked, then it will be a major negative for oil prices, and oil prices could surge even below above the $80 per barrel mark where it is currently trading.
Absolutely. With daily oil shipments of nearly 20 million barrel at risk, the impact could be catastrophic. Thank you so much for that take, Ashesha. Moving ahead and taking a little more deep dive for the energy market to help with oil supplies, US might release it from its oil reserves if prices go up, says Rahul Chadda, founder and CIO, Shikara Investment Management. He also believes that the market could calm if things settle down post Iran and Israel retaliatory attack, as it seems like a temporary conflict. Listen in.
Situation evolves. So would you see the other kind of an oil infrastructure facilities in the Middle East GCC region getting attacked as a retaliatory measure? Would you see other powers being drawn into it? We've seen some statements from Russia. China has been quite here, but do we see the traditional supporters for Iran kind of get drawn into the conflict? If it remains a bilateral conflict, or three-party conflict between US, Israel, and Iran, I think that should calm markets. And if we have a couple of retaliatory attacks from Iran on Israel and things quieten post that, then that should calm the market. And on oil also, let's take a situation that temporarily Strait of Hormuz is closed, oil goes to above $100 a barrel. There's always this thing that US can release oil from some of the strategic oil reserves, etc. So I think it's going to be a temporary conflict, a couple of weeks. It's not going to be a prolonged conflict like what we saw in Gaza. So that's the base case scenario.
Does view on the escalation that we're seeing in the West Asian region and where that could head going ahead. But while we are talking about markets, let's take it across to my colleague Rabinder, who's waiting by with a list of all the stocks that were in the spotlight in today's trade. Rabinder.
Well, NBCC India is in focus. The company has received work order of project management consultancy from Meerut Development Authority, and the cost of the order is approx 297 crore. Moving to next, Adani Enterprises also in focus, where Adani has commissioned India's first off-grid green hydrogen pilot plant of 5 megawatt capacity. So back of this, Adani Enterprises is also in focus. Apart from this, LT Food is also in focus, where US Department of Commerce has imposed the highest possible countervailing duty rate of 340.27% on organic soybean meal export by LT Food wholly owned subsidiary Ecospor Specialty. Apart from this, NLC India is also in focus, where NLC India Renewable Limited, which is a wholly owned subsidiary of NLC India has received a LOA from Tamil Nadu Green Energy Corporation Limited for the development of 3 standalone battery energy storage system project. Apart from this, on back of brokerage note, Polygab India is also in focus, where Jeffries has come out with a note and they have maintained their buy rating and hike target price to rupees 7,150. They said that the FY25 saw further more than 1% market share increase in organized cables and wire segment to 26 to 27% now, and they estimate FY25-28 EPS CAGR to more than 26%, which is driven by strong order book and better FMEG margins. So back of this, Polycab is also in focus.
All right, so these are all the news and stocks which are making a buzz on the exchanges. Thank you so much for that, Ravinder. With that, we are completely timed out on this session. From the entire team who has put the show together, thank you so much, and you stay tuned with ET Now. Thank you so much.